Will the end of stimulus destroy commercial property? Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee, let's have a look at this article from commercialrealestate.com.au discussing or asking the question, what happens to commercial real estate when the government stimulus measures end? Now, we've seen in a previous article how Harvey Norman has essentially won the lockdown with all the increase in retail spending. The question is, what will happen to commercial properties and retail properties, probably from the small to middle scale size businesses. Now, if we jump over here to the Property Council of Australia, we can have a look at their property data room. Let's just look at the office vacancy rates, because I like to show this. See here, see this big climb from 5% up to over 20%? That was the last recession Australia had. You know, the recession Australia had to have. This is for office vacancies. Have a look here in Queensland, this is all over the country, but look at the recession we're just entering into now. Or we just had and gone through, but look at those vacancy rates. We're starting at a much higher level and we're already 11.1%. What'll happen when they climb up? How attractive will these investment properties be that people buy in, maybe for smaller offices or to run their businesses, when they may not need them anymore? How many super funds have been invested in these properties, or how many people are using them with their own super funds? You can't blame them to get the rent on it, but still. So let's have a look. Retail shops could soon go the way of empty city office towers, with small businesses facing a year of reckoning as government stimulus measures are wound back. It could trigger a wave of distressed selling in the commercial property market, sending values plunging, according to the director of an accounting firm in Sydney. Now, government have intervened, the banks have intervened, everyone has pulled together to stop a surge of distressed selling in housing. You know, we've got mortgage holidays, guys. Did you ever imagine mortgage holidays would be a thing, you know, on a massive scale? So, we're already in a recession. It just has a big dirty band-aid on it, said Leah Oliver of Minnick Chartered Accountants, a firm specializing in small family-run businesses. The end of support packages such as JobKeeper, loan relief and mortgage deferrals will increase the number of properties added to the market later this year, Ms. Oliver predicted, as mortgagees worry about possible foreclosures. Well, we've already seen the number of businesses that are bringing in external consultants because they're going under, and the number of personal liabilities or personal insolvencies are at half of where they should be, half of the average. That doesn't happen when you enter a recession, guys. That just shows you how the government is doing everything they can to kick the can down the road. And the worry is that if times get tough, then you'll have a populace that will pivot hard left. That's my concern. What we expect to see is distressed sellers and distressed selling of properties is what disrupts the markets, she said. We haven't seen any of that yet because stimulus measures have meant people haven't felt the pressure to liquidate their assets. Ms. Oliver anticipated demand for small commercial properties would only continue to decline as working from home became the new norm and businesses opted not to renew current lease agreements. Office occupancy rates remain at record lows in CBDs, with figures revealing an estimated 2/3 of Melbourne offices, 2/3 guys, were empty in January, while Sydney offices were less than half full. When some of these leases are not being renewed, then those investments are a lot less lucrative to any investors left out there who are willing to jump in, she said. Most investors want long-term leases signed. That's why when you're signing a long-term lease or they give you an incentive to extend your lease, remember you're increasing the value of their building. You got to take that into account. I learned that after I signed a longer lease. That was a mistake. The sobering predictions about office and retail commercial real estate have also become personal. Miss Oliver recently listed for sale the office the firm had occupied for 3 years, where she'd undertaken a major renovation because her staff are all working from home. To have an asset sitting there that is empty was a no-brainer, she said. She said the writing was on the wall when it came to a looming downturn in the commercial property market, but its severity and duration remained a mystery. At the end of the day, it's pure economics. It's a recession, she said. But we will pass through it and come out the other end. And the Australian property market would remain viable in the long term, Ms. Oliver added, because it was considered an overall low risk due to our strong health system. The financial health and sustainability of small businesses across the country were largely unknown, according to Annie Nalder, Chief Executive of the Small Business Association of Australia. Some businesses have survived well, probably have thrived in some areas. Many businesses are barely surviving, she said. Some industries have been decimated and others are okay. Well, we've certainly seen that. That's the K-shaped economic recovery, everyone. Ms. Nalder said Treasurer Josh Frydenberg's comments hailing economic recovery based on the falling number of businesses eligible for JobKeeper had not painted the full picture. Funny that. A lot of businesses got knocked out of the system because they had 1 month that went well, she said. To me, that's a lot of absolute unknowns. She believes it would take 6 months after JobKeeper ends on March 31 to see the state of affairs for small business. And I think she's pretty accurate with that prediction, guys. 6 months after JobKeeper, that'll be enough to shake all the dodgy operators who are still somehow managing to run on fumes. I wonder if we'll have an election before or after. I think this year is going to be a tough year, probably tougher than last year. Last year was the year of the unknown, but there was a certain amount of protection, and all of that is coming to an end. And this year is going to be the year of reckoning. So there we're having it, everyone. You know, the question of what is going to happen to commercial real estate when the stimulus ends. We jump over here, we can see, look, this is over Australia when the recession had. There was vacancy rates shot up for offices. In Sydney, look at that climb, from under 5% to over 20%. And look here, it's already happening, guys. In Melbourne, about just over 5, look, over 25%. Starting to climb up again. Good old Brisbane. There you go, it's gone from over 5. We've got up, didn't get quite to 15, probably 12.5. Now look at that. Look, we're not even, our occupancy rates are at the peak of the last recession. Look at that, that was the GFC. We had a dip down, we haven't really recovered. We're not at pre-GFC levels in Brisbane. Look at Adelaide. Look at that, 10 up to over 20. Slowly creeping up. Perth, same thing. Look at that, boom. Hobart. Oh, Canberra is kind of flat. It took a while for the ramifications of the recession to materialize in Canberra for some reason. And Darwin, we all know, didn't exist until 2010. But there's also another thing we'll look at here in the data room, the retail turnover. And we can see retail centers by classification. You can just see the different scale of it. You know, super regional 13%, major regional 16.3%, regional 10%. And here in Australia, we don't quite have the same numbers or the ratio, the GLA area per person as other countries. Like the US has double the GLA, square meters of GLA per person as Australia has. They've got so many more shopping centers than us, not per person as well, guys. So it's insane. That's why you can get all these you know, dead mall series and things like that over in the US. I wonder if we'd get it here. I don't think we have the same scale. You can see there we're not at the, you know, Canada's beating us, then us, and then Singapore, nearly half of what we have as well. So we love our malls and shopping centers. So what do you all think, everyone? Are you investing in commercial offices, either as an investor or as part of your business? Is it something you're going to keep an eye on, or do you think it's a sector to avoid? Let us know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I cobble together here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us by PayPal. Take care, guys, and I will see you all next time. Bye for now.